If you're looking for easy investing, there's no better place than Vanguard. With its VWRL, Vanguard All-World ETF, and the live strategy, you really are spoiled for choice. However, there is perhaps a better option on the Vanguard platform and for a very low price, giving you geographical diversification across the whole world and across both large and small cap companies. This is of course Vanguard's FTSE Global All Cap Index Fund. Unlike an ETF, a fund isn't traded on the stock market, which means that it can't be traded whilst the stock market is open. And instead, the price of the fund is valued at the end of each trading day. And really, that's the only difference between an ETF and an index fund. The FTSE Global All Cap Index Fund is available on the Vanguard platform, as well as more reputable brokers online. You can't find this fund on places like Freetrade or Trading 212 to the best of my knowledge. So if you do want to invest in this fund, Vanguard is probably the best place to go. The way you'll find this fund from the Vanguard dashboard is by clicking on what we offer and then clicking on index and active funds. So what we can use is the little tab down the left hand side, and we can select index funds only, so take the active funds off. And there you go, you can see it on screen now, a really simple, quick breakdown of the index fund. The fund is 100% in equities, so there's no bond allocation toward the Global All Cap Index Fund, and that's because it does exactly what it says on the tin. It includes the total market capitalization of the market, and of course that is just equities. You can see it's got an ongoing charge of 0.23%, so slightly higher than things like the VWRL and the live strategy, and that's because it does include some of those smaller cap companies which do sometimes struggle with liquidity when trading on the market, which does obviously incur more fees to the fund holder. It also includes over 7,000 different holdings, and we'll check that out a little bit more in a moment. For more details, we'll click through to full fund details, and that will take us through to the main landing page, as we've seen from most of the funds that we've spoken about previously on the channel. From the landing page, the first thing you'll notice is that this fund can be either an accumulation variant or an income variant. Now, an accumulation variant essentially accumulates any distribution or dividend that you receive from the fund and reinvests that back into the value of the fund. Alternatively, if you want consistent dividends coming into your portfolio and you can then decide where to put them, the income variant is probably the better option. And whenever dividends come out, they will go into your account as cash for you to decide to do with whatever you want. If we scroll down a little bit, you can see that 1 unit of the fund is currently worth £173.11, and it fell just under 0.5% in the last day of trading. On this page, it says it includes 7,180 stocks, again with that ongoing charge fee of 0.23%, with a risk rating of 5 out of 7, the same scale that all Vanguard products are measured on. If we scroll down a little further, you can see a little bit more information about this fund and how it's performed over time. So you can see in the last year, so from kind of September last year to September this year, it is down around 1%-ish. However, previously it's been up every single year before that. We've got the NAV down here, which is the net asset value, and what that red bar signifies is exactly how the fund itself has performed. So essentially what that is showing is that this fund alone has grown 10.18%, 5.3%, 5.02%, 25.97%, and then lost 0.86%. What we can then do is we can compare that to the benchmark. Now, the benchmark is the real life returns of the stock market that it is trying to track. So if we click on the little information over here, it shows exactly that. So this is tracking the FTSE Global All Cap Index. And what you can see is it's tracked fairly closely throughout the last 5 years. It has slightly underperformed when compared to the actual index itself, but it is kind of within 0.1% for the most part throughout the last 5 years. If we pull ourselves down a little bit further, you can see the performance based on a lump sum investment back in December of 2016 over here. So that £10,000 would now be worth just over £17,000 at 17,364. So this basically shows that the fund itself over the last 6-ish years has increased in value by 73.64%. The price and performance data shows you pretty much the same thing as we have already spoken about. The only thing that is new on this page is the 52-week high and the 52-week low of the fund. If we click through to portfolio data, this is where it gets really interesting. We can see a side-by-side comparison of the fund itself and the benchmark that it's trying to track. So the total number of stocks in the fund are 7,180, but within the actual index itself, it should be 9,373, which means that the fund itself that Vanguard have put together doesn't include over 2,000 of the companies that are actually sat within the index. This could go some way to explaining that slight difference between the NAV and the benchmark that we explored a little bit earlier. We can also have a look at the region exposure and the makeup of the fund itself, and it's no surprise when we see that 63.5% of this fund is allocated towards the North American region, 14.9% towards Europe, 10.9% towards the Pacific, the emerging markets at just under 10.5%, the Middle East at 0.2%, and other at 0.1%. We can break it down even further and have a look at the countries in which our capital would be invested in. And again, no surprise to see that North America is sat on the top with over 10 times its closest competitor, which is Japan. You can see that the United Kingdom is in third on the list, with China, Canada, France and Switzerland sat closely behind. As with all funds, it breaks down the weighted exposure to different sectors, and again, absolutely no surprise that technology is sat up the top there. Companies like Apple, Tesla, Microsoft make up the lion's share of any globally diversified fund that you're going to invest in anywhere on the planet. So technology is always going to be a very large proportion of what you're investing in. You might see that as an issue, but I really don't. I only see technology going one way, and that is to keep increasing over time. We now live in the digital age where people expect instant feedback and constant technological advances. So as we see that over the next 10 to 15 years, technology is of course going to keep increasing. And if we pull ourselves right down to the bottom, we then get to the individual holdings of this fund. And for those of you who've seen the S&P 500 before, it doesn't look very different at all. It still includes Apple, Microsoft, Amazon, Tesla, Alphabet, United Health Group, Johnson & Johnson, ExxonMobil, and the only one that's not in the S&P 500 is the Taiwan semiconductor manufacturing. There will of course be companies down at the very bottom, so kind of down towards the 7,000th company that's listed here, which have a tiny fraction of allocated capital towards them. But the benefit of investing in a global all-cap ETF is that it includes every single company, and what we tend to find is that the small cap companies can see the largest rates of growth. So by investing in this fund, you've got all bases covered. From the distributions tab, we can see that the accumulation variant of the fund has a yield of 1.35%, and that of course gets added back into the value of the fund itself. If we click across to income, we can see a slight increase here in the dividend yield, which is actually at 1.37%. So there's a 0.02% difference, meaning that the income fund actually gets a larger distribution than the accumulation fund. Now, I can't explain exactly why that is, but it is definitely worth noting when you decide which variant of the fund to pick. The final section then breaks down the costs and minimums. As we suggested, the ongoing charge here is 0.23%. So on £10,000, you would pay just £23 per year, which is very, very competitive when compared to any other index fund out there on the market. Equally, there's no entry or exit fee, as you would see from some other similarly priced products. However, there is a minimum when you're first opening an account with Vanguard. If you've already got an account, you don't need to bear in mind these two bits down here. If you are new to Vanguard and you're looking to invest for the first time, you'll need to invest either £500 in that first instalment or commit to £100 over a period of 4 to 5 months to meet that £500 before then being able to invest as little or as much as you like. The easiest way to invest in this fund then is to click Invest Now, go up to your basket, click Continue to Purchase, and then log into your account and invest as much as you want in this excellent fund. In terms of simplicity and ease, it is up there with the Life Strategy 100, albeit ever so slightly more expensive than the LS100. As we've spoken about before, there are so many different funds available on Vanguard. There are some to make it as easy to invest, there are some that reduce the fees as much as possible, but this fund, Vanguard's FTSE Global All Cap Index Fund, is very, very good, and it's definitely up there with one that you need to include within your portfolio. If you are new to investing, or you're just generally stuck as to which is the best fund or ETF for you to get into, this is an excellent place to start. But equally, the Vanguard All-World ETF is very good, and so is the S&P 500. So why don't you check them out before you decide where to go?